Once a thriving symbol of the tech industry's success, the Silicon Valley Bank rose to prominence by financing some of the world's most innovative startups. But as the tides of the industry shifted, so did the fate of the bank. Join us as we explore the meteoric rise and sudden fall of the Silicon Valley Bank and what its story can teach us about the volatile world of tech finance. Hello everyone, welcome to our channel. If you're new here, kindly hit the subscribe button and turn on the notification bell to get more videos like this. Let's get started without further ado. The rise of Silicon Valley Bank. Silicon Valley Bank, SVB, is a financial institution that was founded in 1983 in Santa Clara, California. The bank specializes in providing banking services to technology and life science companies, venture capitalists, and private equity firms. Over the years, Silicon Valley Bank has become an important player in the technology industry, and its success has been closely tied to the growth of Silicon Valley itself. In the early days, Silicon Valley Bank was a small community bank that served local technology startups. At the time, traditional banks were often hesitant to lend to tech companies, which were seen as high risk and unproven. However, Silicon Valley Bank saw an opportunity to fill this gap in the market and began offering loans and other banking services to startups. One of the key factors that contributed to Silicon Valley Bank's success was its ability to understand the unique needs of technology startups. Unlike traditional banks, which often had rigid lending criteria, Silicon Valley Bank was willing to take risks on companies that were still in the early stages of development. This willingness to work with startups helped Silicon Valley Bank establish itself as a go-to provider of banking services for the tech industry. As the tech industry grew, so did Silicon Valley Bank. In the 1990s, the bank expanded its operations to other technology hubs, such as Austin, Boston, and Seattle. By the end of the decade, Silicon Valley Bank had become one of the largest providers of banking services to the technology industry, and it was widely recognized as a leader in this space. One of the key factors that helped Silicon Valley Bank continue to grow was its ability to adapt to the changing needs of the industry. For example, in the early 2000s, many tech companies were struggling to raise capital due to the dot-com bust. Silicon Valley Bank responded to this challenge by launching a venture capital arm, which helped fund early-stage startups that were struggling to secure funding elsewhere. Another factor that helped Silicon Valley Bank succeed was its focus on building long-term relationships with its clients. Unlike traditional banks, which often had a transactional approach to banking, Silicon Valley Bank was focused on working closely with its clients to help them achieve their goals. This approach helped the bank build a loyal customer base, which in turn helped it attract new clients and grow its business. In recent years, Silicon Valley Bank has continued to innovate and adapt to a rapidly changing industry. For example, the bank has invested heavily in digital banking technology, which has helped it streamline its operations and provide better service to its clients. It has also expanded its operations to other regions around the world, including Europe and Asia. Despite its success, Silicon Valley Bank has faced numerous challenges in recent years. One of the biggest challenges has been increased competition from other banks and financial institutions that are also targeting the tech industry. In addition, Silicon Valley Bank has faced criticism over its lending practices, with some accusing the bank of contributing to the high levels of debt that many startups carry. Despite these challenges, Silicon Valley Bank remains a major player in the tech industry, and it is likely to continue to play an important role in the years to come. The bank's success is a testament to the power of innovation and adaptation, and it serves as an inspiration to others who wish to succeed in the fast-paced, ever-changing world of technology. The fall of Silicon Valley Bank. What led to the downfall of Silicon Valley Bank? The failure of SVB, which was the 16th biggest bank in the U.S., is the second largest in the nation's history. Silicon Valley Bank, the 16th largest bank in the U.S., was shut down by the California Department of Financial Protection and Innovation on March 10, 2023, due to a bank run. This event takes place when a large number of customers try to withdraw their savings at the same time out of fear that the bank will fail and they will lose their money. The collapse of SVB is the second largest in U.S. history, the biggest being the fall of Washington Mutual during the 2008 financial crisis. Although further details are not yet available, the incident highlights the potential dangers of bank runs and the importance of financial institutions being able to weather such events. This is especially true for large banks like SVB, which are critical to the financial system and have a significant impact on the broader economy. The collapse of a bank of this size could have far-reaching consequences, and it remains to be seen what actions will be taken to address the aftermath of this event. In 2020, SVB experienced its first quarterly loss in over a decade thanks to the COVID-19 pandemic. As businesses struggled to stay afloat, SVB saw a surge in loan losses, resulting in a $72.3 million loss for the quarter. However, SVB remained committed to supporting innovation and growth in the tech industry, and by the fourth quarter of 2020, it had rebounded with a net income of $123.1 million. Despite this positive income, the tech industry is constantly changing, with new players and technologies emerging regularly. SVB will need to adapt to these changes to remain relevant and reliable to the industry it serves. Nonetheless, the tech industry needs a bank like SVB that understands the unique needs of startups and tech companies and is willing to take on the risks associated with financing their growth. The crisis at SVB began when the bank, which primarily catered to technology and healthcare startups, received a significant influx of deposits during the pandemic. Like other banks, SVB invested these funds in U.S. Treasury securities, which are considered low-risk investments as they are backed by the federal government. Unfortunately, the value of these securities began to decline in 2022 when the Federal Reserve increased interest rates. According to the New York Times, NYT, the devaluation of the U.S. Treasury securities that SVB invested in would not have been a big issue if customers hadn't started withdrawing their money. However, customers did start withdrawing their savings, and as a result, financing for emerging companies that held accounts with SVB also slowed down. To meet customers' cash demands and return their money, SVB sold some of its treasury bonds at a loss on March 8th, just 2 days before the bank's collapse. This move resulted in a loss of $2 billion for the bank. And the announcement by SVB that it had to sell bonds at a loss to meet its obligations created panic, leading to a bank run where companies tried to withdraw their money from SVB at the same time. This caused significant investment losses, which, combined with the withdrawal of savings, was so great that the authorities had to step in and take control of the bank to safeguard the interests of savers. Although the fall of SVB may have been a temporary setback, it is too early to write off the bank just yet. With the right leadership and strategy, the bank may be able to weather the storm and emerge stronger than ever. Is there any hope for Silicon Valley Bank? While the bank has since bounced back somewhat, its future remains uncertain. So, what does the future hold for Silicon Valley Bank? Some analysts believe that the bank will be able to weather the storm and continue to be a major player in the tech industry. SVB still has a strong reputation and a long history of success in the industry, and it has made efforts to adapt to changing market conditions. Others, however, are less optimistic. They point to the bank's recent financial struggles and its exposure to risk in the tech industry, and suggest that SVB may not be able to sustain its current level of success in the long term. As more banks enter the market for tech-focused banking services, SVB may find it increasingly difficult to differentiate itself and attract new customers. Ultimately, the fate of Silicon Valley Bank remains to be seen. While the bank has faced significant challenges in recent years, it still has a strong reputation and a long history of success in the tech industry. Whether it will be able to overcome its current challenges and continue to be a major player in the industry remains to be seen. But one thing is clear, the fall of Silicon Valley Bank would be a significant event in the tech industry, with potential ripple effects on the startups and tech companies that rely on the bank for financing and other services. One factor that could play a role in the bank's future is its leadership. In 2020, SVB announced that its CEO, Greg Becker, would be stepping down after more than a decade in the role. Becker had been instrumental in the bank's success, and his departure raised questions about the bank's future direction. However, the bank's new CEO, Laura Izarita, has a strong background in finance and technology and has already begun to make changes to help the bank navigate the challenges it faces. Another potential factor in SVB's future is its relationship with the tech industry itself. As the tech industry continues to evolve, with new players and new technologies emerging all the time, SVB may need to adapt its approach to remain relevant. This could mean expanding its services to new areas such as fintech or healthcare, or finding new ways to work with startups and tech companies that are changing in the face of the industry. Potential new banking crisis? Most of us can remember the banking crisis of 2008. Is the fall of SVB the start of another banking crisis? Well, the fall of the SVB is the largest bank failure since 2008 financial crisis and did shock the financial world again. Not long after the fall of the Silicon Valley Bank, Credit Suisse, the second largest bank in Switzerland, was bought by rival UBS for about $3.3 billion. A report posted on the Social Science Research Network in March 2023 found that 186 banks in the United States are at risk of failure or collapse due to rising interest rates and a high proportion of uninsured deposits. The report, titled Monetary Tightening and U.S. Bank Fragility in 2023, Market-to-Market Losses and Uninsured Depositor Runs, estimated the market value loss of individual banks' assets during the Federal Reserve's rate increasing campaign. Overall, the situation highlights the importance of a stable banking system and the need for effective risk management practices in the financial sector. That's all for today, folks. Thank you for spending some time with us. If you found this video interesting, let us know what you think in the comment box. Make sure to hit the like button and notification bell, and subscribe to our channel to get access to more interesting videos from us. While you are here, kindly click on one of the other 2 videos you see on your screen. See you there!